What's going on, traders? Todd here. Happy end of June, end of the quarter, end of first half. Big move today. GDP kind of shocked everyone. Final Q2 up 2%. They were expecting about 1.4. Earlier estimates were about 0.8%. So kind of makes the recession argument hard to make. So we have a big move in yields. And if you've been following this channel, we've been very much focused on the impact that U.S. yields have had on the rotation, sector rotation, value growth rotation, as well as within the sectors. In this video, we're going to get down a little bit further below the sector level, get into the industry group level, sub-industry group, show you a new position that we have on. A lot going on here. So there's some interesting market movements here. Tomorrow morning, we have PCE, the Fed's preferred inflation gauge, and then we're 2 weeks into July. We're looking at earnings season, Q2 earnings season, and then another CPI report. I don't know if it's going to be a slow July, so a lot to show you guys. So let's dive in here. One thing that I do want to share with you guys is this report that I sent out to customers and members of TradingAnalysis. There's a couple key themes in here that I think you guys might benefit from, and will kind of help you understand what's going on in the market here following this GDP report. Okay, so what we want to focus on here is right here. Okay, if you've been following this channel, you've seen this chart before. So what we're looking at, there's a lot going on here, but I'll break it down here quickly. So the black line is the value growth ratio. So you take value, divide it into growth. It's being followed closely behind by the US 10-year yield. Right now, why would that be? Well, back here in 2021 and 2022, when inflation was raging, markets were selling bonds, moving up interest rates, and the Fed had to obviously raise rates to contain inflation. And that made the argument of holding high-flying growth stocks with massive valuations, and hopefully, the hope of big profits down the line at some point hard to make. Where in market volatility, investors prefer to be in dividend stocks and more stable balance sheets and income statements, and that's why that correlation exists. Well, what happened here just in the last couple of weeks is, if you can zoom in here a little bit, we started to do a double bottom here on the value growth ratio, which means value stopped selling off against growth. And why did value sell off against growth? Growth rallied against value is because yields stopped going up. So as yields, US 10-year yields started moving up and getting up here to 3.8, 3.9 resistance level, the value growth ratio stopped going down. So value is now getting its footing in the form of a little double bottom. And I was showing down here on the relative rotation graph, value was rotating in on the weekly over the last 5, 6, 7 weeks as growth was rotating out, and had everything to do with yields. So the way I posed it with customers is like, okay, guys, we're going to look at two scenarios. Okay, either yields on the 10-year break above 3.9, 3.95, and thinking back to that last chart, that's obviously going to, not obviously, that's likely going to continue to drive the values trades outperformance relative to growth if we go higher in yields. If we fail here at resistance, the second scenario, then we're probably going to see a continued growth outperformance to value, growth doing great. Again, that's tech and communications and consumer discretionary. Well, the report today, the GDP report, kind of crushed that. It didn't crush it yet, but it looks like the resistance level that I'm kind of watching here at about 3.9, 3.95, there's a downtrend line. We have a little bit of Elliott wave resistance here. This downtrend line goes all the way back to October 22, stock market low. So this is a pretty important breakout. And if we get above this, that rotation that I just mentioned over here, where is it? It's up here, right? Right here. It's probably going to poke that value trade above, and if you're full on long growth, we might need to consider looking at some value. Okay, and I love being long growth. I love trading growth, but the market is going to get what it wants. So what I did is I laid out some key value sectors that we want to avoid. We don't want to be trading in staples, healthcare, energy, utilities. The ones we want to be looking at here are the ones that are showing good relative strength, trying to rotate in here on the weekly. Over here on the monthly chart, long term, we've had a big lot of underperformance, a lot of rotation out in value. But over here in the shorter time frame, industrials, materials, real estate, and financials are starting to make the move. So then I went one step further, and before I'll show you that in a sec. This is the growth sectors, tech, comms, and consumer discretionary. I mean, looking great, pointed northeast, picking up relative strength, picking up momentum, doing great. Over here on the weekly as well, comms has kind of been rotating out. Tech and consumer discretionary are doing well. But again, everything's kind of hinging on this key level in interest rates. Well, the GDP report this morning spiked it up, and we saw a good rotation, and we saw value, and specifically small caps, which we'll get into, start to do very, very well. So what I want to focus on here is the industrials. If you look inside the industrial sector down into these industry groups right here, they've been doing extremely well. Just checking my notes to stay on track here. Okay, so let's get into the industrials. Now, something that I've heard a lot of people say is don't trust this rally because it's led by the magnificent seven, the large cap growth. Not the case anymore, okay? Let's look at the relative rotation on 3 different charts. So these are all weekly RRGs. First one we're going to look at is your main sector spiders. These are your cap-weighted sector spiders. So consumer discretionary, right side, heading up, doing great. Technology, right side, heading up, doing great. As I mentioned, comms, right side, but sort of falling out of favor here a little bit, and there's some things going on in the comms, but the one that I want you to focus on here is industrials, okay? Industrials is heading up to the right, which means it's picking up momentum to your benchmark. So industrials are trying to get a little bit of steam ahead of trying to steam ahead of the S&P, and the other ones that are doing well, you would say that financials are trying, real estate is trying, believe it or not, materials are trying. And what's interesting here is this is cap-weighted industrials, but speaking to this breadth argument, here's small cap. Here's small cap sectors. What are the 2 guys on the weekly that are just spiking up into the right, trying to blow out the top of the roof here? Industrials and tech. So you're getting small cap, tech, and industrials moving. And over here on equal weight, you're going to see the same thing. What's leading it? Tech and industrials. So you're seeing large, equal weight, and small cap industrials on the move on the weekly relative rotation, of course, being confirmed by what's going on here. I just want to show you also the Russell 2000 small cap. This guy's been quiet for a long time. As the NASDAQ's breaking out, the S&P's not breaking out, small caps have been sideways. And of course, I have my Elliott wave analysis on here. And the way we look at this is, I won't spend too much time because I know a lot of you don't follow Elliott wave. For me, it's a blessing and a curse all at the same time. I can't be without it. And it drives me insane to explain it, but I try. But all you got to do is spend a weekend with a book and you'll get it. But if you look at this, it's ABC, Connector X, and then you can have this triangle consolidation in the final phase of a correction when it's a Y wave. Okay, so WX, triangle Y. We ended the correction here in May, and I think we're doing an impulsive 5-wave move up here off the lows. And small gaps are now coming back. We're threatening this downtrend line from 2021. Triangle completion. I think the correction, the 21 to 22 correction into 23 is over. And I think we're heading higher here. And of course, we have a lot of macro forces behind us, positioning. A lot of people are very underweight small caps, and we might have enough to spike on up. And, if you don't get this one, maybe we look for the wave 2 pullback here. Okay. So the stock that I want to focus on here, let me go back over. Let me show you within the industrials. Okay. See if you can pick it out. Okay. So this is the industrials sector. This is industrial sectors, industries, and sub-industry groups. And the one that I want you to focus on here today is this one, aerospace and defense. Okay, this is the aerospace and defense sub-industry group. These are going to be the strongest stocks within this sub-industry of industrials. These guys are all over to the far right-hand side of the monthly, lot of outperformance to the benchmark. And down here, when you get these hooks down here in the bottom half and trying to move back into leading, that means we're picking up momentum and relative strength to the benchmark. So there's a few names in here. Take a look at some of these guys: TDG, HWM, HXL, and there's one in here that we put on, a new stock that we put on with clients today, and let's see if you can pick it out. I'll show it to you right here. We put it on in our stock swing desk with our clients here, right here. Yep. So this guy here, AeroVironment, AVAV, which we trade a $250,000 model portfolio. This is real money, but we trade a $250 model portfolio carrying stock positions for our clients and customers at TradingAnalysis, and we update them in real time. We just added this trade today. I wanted to share it with you. Okay, so this guy, okay, is a drone maker, AeroVironment, just reported earnings, okay? Record sales and strong performance in the Ukraine. Surge Wednesday, the robotics and drone maker topped estimates for Q4. They make unmanned aircraft systems, including Switchblade suicide drones that have been in service in Ukraine since the beginning of Russian invasion in 22. Company's Q4 adjusted earnings bolted 99 cents a share from 12 cents a share last year. Net revenue, 40%. On 186 million in revs. FactSet was looking for 95 cents on 159 in revenues. Just a huge quarter here. So if you look at the chart of this guy, talk about triangles. Remember I showed you that triangle in the Russell? Look at this thing. This is crazy, huge, beautiful wave count here. Beautiful, big old wave 4. This guy started way back here in September of 18, 5-wave swing, A, B, C, D, E. Ton of consolidation here. This thing's ready for liftoff, ready to explode. Insert any cheesy, distasteful, combat drone joke you want in there. Please don't cancel me or be mad at me. I'm just trading the capitalistic market. If somebody doesn't make money on it, if we don't step in and make money on it, somebody else will. So, it's our job to provide liquidity. But good 5-wave move up. We went down in A, up in B, down in C, 786. This was earnings. So just put the trade on. Long here, stops down at 88.75. Looking for a wave 3 move up in AVAV. So a lot going on there. I'm certainly aware of it, but we have this is a small cap defense stock at the sub-industry group that's doing very well relative to industrials. Industrials, we know in a sector rotation are doing very well, not just at the large cap level, not just your Cats and your Deers and your Raytheons and so on and so forth. I mean, we have small cap industrials doing well. We have equal weight industrials doing well. We have large cap industrials coming on. And with interest rates on the macro, flavor in there, the macro influence, I should say, is starting to continue to drive this value trade, whether it lasts or not. We'll see tomorrow with PCE. And is this a sign with a strong GDP? We have PCE tomorrow. We have CPI coming up here in a couple of weeks. We have Q2 earnings coming up. Is the Fed going to continue to stay hawkish? And that's what the market is trying to trade on. So it's interesting. A lot of fun out here. Hope that helps, guys. Look forward to seeing you on the next video update. Hi, it's Todd from TradingAnalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at TradingAnalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.